tonight's discussion, as you may or may not know, is a primer in trend trading. And by primer, I mean we're going to get into some basics of trend trading. So for those of you that have seen me swing trade in the past, this might be a little bit remedial, which there's no harm in drilling the basics. For those of you that are new to the way that I trend follow, then you're certainly in for a treat, because we're going to get into the tools that I use, the tools that you actually, as either a live IBFX account holder or a demo, even a demo account holder, you have access to these tools from within the IBFX version of MT4. So these are things you'll be able to put to work right away, which I always love that. For those of you that are familiar with my tools, the 34 EMA wave and the grab candles, the green, red, and blue candles, I'll be using those. We'll be talking about pairs that are on my watch list right now, so I'm hoping to make sure this conversation is current and actionable. So we're not going to be looking back very much. We're going to be looking at the now and looking forward. If there are questions about pairs that I may not be discussing, feel free to type them in. That's the benefit of being here live, that's for sure. So if there is a pair you want me to take a look at, or even just a pair that you want to analyze here together in the room, that'd be terrific. I've got zero problem with that. Just let me know what that pair is, and if there's a particular time frame, let me know that as well. So if you could, I'd appreciate it, because I love a tangent, and I'll go screaming down any tangent as long as it's related to trading. And of course, a 1-hour webinar could easily turn into a 4-hour at the pace that I can go off on a tangent. So to help me and to keep the conversation focused, if you could limit your questions to the topic, which is looking at trend trading opportunities. So let's get into some of the basics here, okay? Now, the first thing is there are 4 types of trading strategies that I use. Okay, and they're all going to come back to not what I want to impose on the market, but what I want to see that the market is communicating to me. Now, for the purposes of our notes here, as we're going to talk about some things, and to make sure that you all can get access to these, one of the tools that I love using is a tool called Workflowy. I don't know how many of you have used it before. I love Workflowy. It's absolutely one of my all-time favorite tools. And what I'll do is share with you all the link in order to be able to catch our webinar notes today. So I'm going to go ahead and actually create just another headline here. And I'll go ahead and date it. This is the March 21st webinar. So some of these basic notes I'm going to go ahead and type in here, and then later on I'll give you the link to them, okay? So let's go ahead and cover a few things right off the bat. There's 4 types of trading styles that I'm going to focus on. So obviously today we're going to be focusing on the trend trading. Okay. Now trend trading is what we're going to focus on in a very specific environment. We're going to be looking at trend trading within the context of a 12 to 2 o'clock or a 4 to 6 o'clock market trend. So basically, we're looking for the 34 EMA wave to be moving up or down, but specifically within this idea of a 12 to 2 or 4 to 6 o'clock EMA angle, or what I call the clock angles. Okay? So that's the first thing. The other thing we're going to use is the grab candles, and we're going to be looking for a steady or consistent view of either red or green grab candles, the red or green color-coded candles, which gives us insight into the sentiment and the momentum of the market. So think of it this way. Sentiment plus momentum equals trend. What do I mean by that? Well, we're talking about trend trading here, right? But only if people are thinking a certain way, which is sentiment, and then begin to react to that idea, which is what creates momentum. If that momentum organizes, then we'll have ultimately a trend. So sentiment plus momentum equals trend. The way we see that is in the 12 to 2 o'clock or 4 to 6 o'clock EMA angle, and with the red or green, steady red or green grab candles. Keep it simple. Don't overcomplicate it. Another thing that we want to recognize, and this is, I think it gives us an edge, and that is, what is the daily trend? If you're not starting off at least some part of your trading, your individual trading plan, with this idea of what is the daily trend, you could be in a position where the market is counter trend intraday, and you could be essentially, even for a short period of time, swimming upstream versus following the dominant psychology. So remember, when you're asking what the daily trend is, what you're trying to follow is that dominant psychology. Okay? So just a few quick notes there. Remember that the style that you choose has less to do with what it is that you want to do and more with what it is the market is doing. Okay? We look at the market's phase or trend or cycle, however you want to call it. I don't get hung up on the wording of the descriptions, whatever the classic descriptions are. I really could care less about that. I want you to ask yourself, if I am a momentum trader, I'm trying to take advantage of breakouts or breakdowns. That's ideally done in a non-trending, narrow-ranging market. If I'm looking to fade the extremes of a range, I need a range. I need a volatile, wide range. If I'm looking for a trend reversal, I need a trend first in order to take advantage of the reversal. And of course, our topic tonight, if I am going to trade in a trending market, my first job has to be, how do I go about identifying it? I don't care if it's intraday, short term, end of day, daily, or 240. You still must have a consistent way to identify the trend. So those are our quick few notes there. All right. And by the way, this is a very cool. I've been a big fan of writing my notes down for a long time, and what I've been doing lately is using the Workflowy. Again, it's a very cool tool. So what I'm able to do, and let me just show you a couple things. Number one, you don't need a Workflowy account to do this. This is not something you need to go pay for. This is just a way that I like to be able to share my notes with you all. You guys know most of you all probably know I'm not a big fan of PowerPoint. So you can sign up for a free Workflowy account. Again, I don't work for these people. I use this for my own notes. So you can sign up for a free Workflowy account, and there are paid features, but for the most part, is it similar to OneNote? Michael asked. There's a number of tools out there that might be similar. I'd put OneNote probably a little bit more on par with, say, an Evernote, perhaps. I don't use OneNote, but Workflowy is just an online. There's an iPhone app for it. I believe there's an Android app. It just outlines. It's an organizational outlining tool. It's really simple. If you guys have never played with it before, there's the link for it. Now, the link for our notes here tonight, I'll share with you here as well. And that's right here. Now, you don't need the account to look at these tools. This will just open up in a browser if you were to click on it. So I'm a big fan of this. I use it for my own notes. If you can, just to give you an idea, I've been using this for a while. And I've been basically since the beginning of the year. And what I'm able to do is have a set of notes or watch lists and videos and whatnot for every single day of the week. And these are just March's notes. So I'm a big fan of it. And I use it for other things too. This is just but one section of the workflow where I use my this one section for fishbowl notes. If I have PDF titles, any of my articles, webinars, I have an ebook that I'm writing in here. So, and we have one more section here for the IBFX notes. So, very cool tool. But that's something that you can utilize in your own trading. You know, if you're keeping a trading journal or some sort of observational tool, you know, rather than just writing it down, you'll have access to it anywhere that you have internet access. So I've enjoyed using this the last 2.5 months, and I've been getting away more and more from writing my notes and more to using some sort of service like this to keep my notes versus pen and paper, which at first kill me, I got to tell you, because I'm a pen and paper kind of girl, but I've really been enjoying doing the journaling and the noting here in Workflowy. All right, so now that we know the kind of environment we're looking for, let's talk about some of the markets that are in that environment. So I see there's a request for the Euro Yen. Sure, no problem. We can do that. Let's go ahead and jump into that. So right off the bat, I mentioned during that note-taking portion of our conversation there that you really at some point need to start with a look at the daily time frame. If you're not doing that, then you're going to miss out on the larger dominant psychology. Is there a dominant trend in the Euro Yen? Well, I'll admit, probably the lingering sentiment is most definitely going to be bullish. There's no question about that. But the current sentiment is much more neutral. Okay, so we have probably some residual bullishness, which just makes traders a little bit more apt to buy into pullbacks than they would be to sell them on a bigger and a longer term, bigger picture basis. But right now, we're definitely more neutral. So observe what the wave has done. It was moving up at 12 to 2, and now it's chopping around a little bit at 2 to 4. It's trying to flatten out, and the most recent price action really has tightened up, and it really is trying to flatten out, but it's still a little volatile. There's probably a pretty good reason to look for traders that might be trying to execute some sort of triangle setup here. A triangle pattern is a classic congestion to consolidation pattern. What do I mean by that? It's a classic example of a pattern that starts off with that wide, volatile sideways range, and if the triangle support and resistance, the uptrend line and downtrend line of this symmetrical triangle, if they hold, they will naturally squeeze prices into more of an ever narrowing range, what I call the narrows. We're getting there right now. We're definitely getting into the narrows because I'm seeing more blue grab candles, I'm seeing the wave flatten out, and I'm seeing the range getting squeezed. So we're definitely in the narrows, and in this situation, we could be looking for a breakout or breakdown. But we are not in a trending environment any longer on the Euro Yen. Now that does not mean that I can't find a trend following opportunity for this pair. In fact, one of the things I need to do is remove the stochastics from that daily and actually utilize the MACD, because this is the tool that I'll use for momentum trading. However, it doesn't mean that there's not other opportunities we could focus on. One of the time frames that looks pretty interesting right now, and this would be a trend following setup, but it would be an intraday setup, a short-term intraday setup. And one of the things that's a pretty natural thing to do is when you see that the market is stuck in a sideways range, you do not want to commit to longer-term time frames. These are not where you want to focus your attention, because if the market is confused and stuck in a range, expecting longer-term follow-through is not necessarily a wise decision. So instead, you'll focus on shorter-term, more nimble time frames like the 5, the 15, and the 30. So with all that in mind, what I then want to do is make sure that ultimately what we have at work here is a trend follow, but one that we also acknowledge is stuck in a range, and therefore it could exhaust, it could be subject to a lot of volatility. I'd rather execute a trend follow if I'm going to compare the euro-yen to another currency. I'd rather trend follow the euro-US dollar, just by comparison. If I'm going to choose a pair to trend follow, if I'm going to choose a pair to trade, period, I have an edge in the euro-US dollar because ultimately I have a downtrend on the daily. I have what I call bearish directional bias. So one of the things that you want to ask yourself when it comes to trend trading and it comes to that daily environment, you're looking for what I call directional bias. Is there an up or down trend on the daily time frame? Directional bias. Okay, that's ideally. So in this case, the euro-US dollar has it, the euro-yen does not. Okay? All right. So that doesn't mean I can't trade the euro-yen, but the setup that I'd be focusing on in the euro-yen would likely be the 30-minute chart, and I'd be looking for shorts here, looking for the 12. Actually, what we have here was a 12 to 2 o'clock angle. It's rolled over and it's now giving us a 4 to 6 o'clock angle. And the real gem of this trade could be, for example, getting up to a short around the 2280 to 2300 or 1.2280 to 1.2300 level. Not 1.23, 123.00 level, and taking advantage of the short sell on this time frame based on the downtrend. So we're looking at two resistance levels, the 80 pip and the 00. And if we do get that fill, we could see lower lows, and if we do see the lower lows, the real gem of that intraday 30-minute would be, can we break down through the uptrend lines of the daily? Could this 30-minute intraday downtrend ultimately be the way in which we see the building block, the shorter term time frames, break this congestion to consolidation pattern, this symmetrical triangle? That would be one way to look at it. Another way to look at it would be, well, if we exhaust around the 50 pip level, which we're doing right now, look to expect some support at levels we've been to before. These are breadcrumb levels. We've been there before. We could go there again. We do have some reactions there. In fact, this 30 area seems to be a level of pretty decent support. So we may not even get to the 00 in this case. We have to look at the breadcrumbs and say to ourselves, well, very recently the market found support here, and it could very well do it again. So we know there's a series of obstacles to the downside. Again, this is just a short-term intraday time frame trend follow in a market that does not have overall bearish directional bias. So let's go to that Euro-US, which does, and talk about the opportunities there. So what are the tools that I have running here? I have the grab candles. I have the 34 EMA wave, both of which, if you take a look at the navigator and go into all the studies, it's a custom study that is built into the IBFX MT4 platform. The grab indicator has 3 individual studies you'll have to drag and drop to color code the candles and put the 34 EMA wave, the 34 EMA on the high, the close, and the low on your chart. I also have the 20 period simple, 50 period simple, and the 200 period simple moving averages on the chart. In terms of defining the trend and directional bias in this case, do you notice that we have the consistent red grab candles and we have a push to lower lows, and we have a 4 to 6 o'clock angle of the wave. So everything that I would want to confirm the fact that we are moving lower in a downtrend, I have. The wave is confirming it, and the consistent grab candles are confirming it. What am I looking for, by the way, when I'm trying to identify a trend? Let's go back to our notes here and talk about it. We're trying to find market clarity. And market clarity is defined by three things. We use the wave to do it. So you're going to use the 34 EMA wave, and you're going to ask three simple questions. Is the wave smooth? So again, we're talking about 12 to 2 and 4 to 6 o'clock wave angles. And as it's moving down in that angle, we're asking ourselves, is the wave smooth? If you have a wave that's very lumpy, that's probably reflective of a high degree of volatility, and you probably want to either, one, adjust your risk tolerance accordingly, or two, say to yourself, well, I may not want to deal with this kind of volatility and unpredictability. That's certainly a viable choice, smart choice for lower risk tolerant traders. The other question you're going to ask yourself is the wave established. In other words, how long has that daily trend, or trend on the intraday time frame, but how long has the angle been in place? Is it very fresh, or has it been in place for a while? So how long has the angle been in place? And the last question is only applicable on corrections, but that is the wave respected? And by that I mean, if we've gone up to test the dynamic resistance of the wave, have prices been rejected? So let me ask you those three questions about the daily Euro-US dollar. First of all, do I have the 4 to 6 o'clock to even begin the conversation? Yes, I do. That's kind of the question that precedes the questions. So is the wave smooth? It's relatively smooth. There's a little bit of shake to it, but nothing to get too concerned about. But it does reflect some of the volatility. We know the euro's been quite volatile as of late. So is it smooth? For the most part, yes. Is it established? Well, how long has it been moving with these red grab candles? It's been moving with red grab candles since basically mid-February, mid to late February. It's had a wave that's in that angle that we could probably say, hey, yeah, we're pushing down to lower lows and in a downtrend since probably the first week of March. So I'd say it's about, I wouldn't call it a very established downtrend, but yes, I don't think there's any question that if you were to ask traders right now about the Euro-US dollar, the lower lows and the lower highs are definitely making people feel that, hey, this is very much a downtrend. I think, and this is to Michael's question. Michael has a good question. The timing is great. How about a trend line? Michael, I like trend lines. I draw them on my charts, but my problem is they're terribly lagging usually. They're terribly lagging. So I could actually, in this case, put a downtrend on this chart. In this case, it wasn't too lagging, and it actually is overlapping with the wave pretty well. So on this chart, it's actually working pretty well. But the thing with a trend line is it not only needs the lower lows and lower highs to begin the angle lower, but it actually needs correction. So you're not going to get the touch points you need unless you get the corrections. And you need at least 1 to 2 corrections to draw the trend line. And by then, those 1 or 2 corrections could have been corrections into the wave that you could have traded. And my other problem is, and not that the wave isn't subjective, but trend lines are incredibly subjective. I feel that if I told traders to look at the 34 EMA angle of the wave within a 1-year look back, which is what we're in right now, I've got 1 year across the bottom of this chart. I'm looking at a very consistent amount of data every time I take a reading of the wave on any time frame. For the daily chart, it's 1 year. I think if I tell traders to squeeze in that 1 year and look at the angle, for the most part, we're not going to see anyone saying it's in an uptrend because the grab candles are red. And really the question is going to be more likely about how long has this trend been in place and how steep is it. I don't think anyone's going to question, just by looking at the grab and the wave, that we're not in anything but a downtrend. So I think I can take a certain amount of the subjectivity out of that conversation, where trend lines can be drawn from a number of places depending upon the look back that a trader has on their chart. So the amount of data on a chart can dramatically affect the way in which these very subjective tools like trend lines and chart patterns for that matter would be drawn. So the landscape absolutely affects the way in which your analysis is drawn on your chart. So I don't disagree, but just remember that the trend lines, I think I would put second to my wave, but I think if you have a trend line that you feel is being drawn on some very obvious touch points, and again, there's so much subjectivity there, but you could be dealing with a line that's very psychologically relevant. Okay? So to the latter part of your question, no, I don't think there's certain pairs that ignore the dynamic support or resistance, or the edge, as you call it, of trend lines. I don't think there's one that's any more or less cooperative. I think it depends on the environment that you're looking at them in. The fundamental environment, the volatility. I think a lot depends on that, because technicals like trend lines, subjective technicals like that, anything like that, those, when the fundamental environment becomes very prickly, price action momentum and order and respect for technicals gets thrown out the window. It often does. So when you have a situation like Cyprus, when you have a situation, as long as we're talking about the euro, like the Italian elections, throw the technicals, so the price action out the window, the market's going to be moving with the psychology of the fundamentals. We know when fundamentals are starting to settle, when the technicals and the price action start to reorganize and become respected again. So that's the way I kind of balance that out. But it's all important. It's just a matter of prioritization. So if I have bearish directional bias on that daily euro-US dollar, the next step then is to know that any short sell is trend following, whether it be on the 5-minute or the 240 or the daily. But any short sell is trend following. You're going with the flow. Any long trade, any trade to the upside, any buy would be counter trend. Typically, I don't like counter trend trades. I'd rather be following the trend. Just because it's short on the daily doesn't mean I'm limited to trading the daily. I might look for opportunities in the 5, 15, 30. 60, 240 doesn't matter. But the short side is the comfortable side. It's the side where I'm floating along with the river. I don't know how many of you have been, when you float down the river in those big inflatable things. I forgot what it's called. But basically like a raft, those big round rafts. It's completely, I'm blanking out completely, but those big round rafts and just float down the river. That's really what I'm looking for. Tubing, yes, thank you. Thank you. Thank you, both mics, thank you. Tubing, yes. I don't know why I couldn't pull that out of my head. Tubing. So it's like tubing. You can try for a little while to navigate other than the way the river wants to take you, but it's going to exhaust you and maybe tip you over. Okay? Trading is the same way. So if I can follow the trend, I will. But if there is a buying opportunity, I'm not saying that you cannot counter trend. But what I will tell you is if you are going to counter trend trade, which in this case on the euro-US dollar in its current state would be a buy, do so only on the 5, 15, and 30. Commit to short-term, nimble buying opportunities if they even present themselves. I don't think we have an opportunity right now on this euro-US dollar. Okay? I don't think we have one at all. When you think about trending markets, I think a lot of you would think about markets like the dollar-yen. That's been in a very strong trend. Okay, obviously, I think this is one that comes to a lot of people's minds. Is there bullish directional bias here on the dollar yen? Absolutely. Do I want to commit to dollar yen short positions? I mean, that is something that I think we've seen throughout today on the shorter term time frames. And yes, if you wanted to take advantage of that across short term time frames, you could take those counter trend shorts. Okay, and in fact, if you are a longer term bull in the dollar yen, you are rooting for those counter trend shorts. You are rooting for the short sells on the 30, on the 15, because that's ultimately what could bring you to the trend follow on the daily. And this is what I call a one thing leads to another. So the intraday short sells, the weakness we're seeing, could bring me to a support level in a longer term time frame like the daily and trigger my swing buy. Why am I interested in a swing buy on the daily? I have a 12 to 2 o'clock angle. Yes, I have consistent green grab candles with the exception of a few blues. Some of you might wonder, well, what happened here? This was actually the Italian election. It was the shock of the Italian election. That's what kind of derailed this uptrend for a little while. And only momentarily at that. So, looking for buys on the dollar yen? Absolutely. But I am a fan of those bears intraday because they're the ones that get me to ultimately the correction that would be the trend following buy. So contrast the 4 to 6 o'clock angles of the 15 and what was even a 4 to 6 o'clock angle on the 4 to 6 o'clock angle on the 30 and what was a 4 to 6 o'clock angle on the 15 for a while. But contrast the consistent green grab candles and the 4 to 6 o'clock angle, which was triggering short sells. Contrast that with what we have daily. Do I want to commit and give a 30 or 15 minute dollar yen short too much leeway? I absolutely do not, because I think there's more psychology behind yen weakness and or US dollar strength than there is vice versa. Now, AZ, you bring up a good question. Is the dollar yen weakening? I won't say it's weakening, but I will say that it's losing what I call mojo. What do I mean by that? Well, think about the fact that an uptrend, who's the unsung hero of any uptrend? The unsung hero are the lower lows or the touch points that would create the uptrend line, right? Your lower lows, your support. That's your unsung hero. The support that or the series of higher lows, is the unsung hero. It's the backbone, though, of the overall trade. On the opposite side of that, though, is the attention grabber. And that is the higher highs. That's the swagger. That's where the spotlight shines. That's what gets attention. Those higher highs. People seldom are talking about getting bullish on any uptrend on a pullback. Strategically, the smart traders are. If there's a healthy trend and the fundamentals that may be driving prices lower are not game changers. But strategically, most traders who believe the uptrend is healthy will look for opportunities to buy into those pullbacks, those corrections of an uptrend. However, your uninformed trader, your trader that just is looking at a general scan, not doing their homework, not cognizant of the underlying market trajectory, they're the ones that get all excited about the higher highs. You know, it always reminds me of the gold market. You know, nobody was asking me about gold, and most of my friends and family know I'm a futures trader. They've known it for, the better part of a couple of decades now. But nobody was asking me about, for example, gold, or even Apple for that matter, when the market was kind of in the best opportunity, giving traders the best opportunity to get in. I mean, gold in the $400 to $600 range. I mean, Apple in the $205, $220, even the mid $300 range. You know, when prices weren't as volatile, but they were pulling back to certain support levels within the context of fairly fresh trends. Gold is a great example. When did people start asking me about gold? When it went ballistic. When did people start asking me about Apple? When it went ballistic. When it had mojo and it was pushing to higher highs, which was the absolute worst time to get into the market. If you really believe gold is in an uptrend, if you really believe Apple's in an uptrend, you are waiting with bated breath, I can't even talk this evening, bated breath for those pullbacks, and you're going to pounce, or you're going to have limit orders waiting to capitalize on those corrections. Okay? So one thing that is a knock against a lot of the trends that we're seeing here in the market, and I will tell you, the overall market trends are starting to shift because the respective central banks have begun to take their foot off the pedal. Earlier this year, we had a tremendous amount of momentum and fuel in the tank because the central banks are just driving these trends, whether that be the yen. There's a lot of clarity from the central banks, or at least traders perceive there to be clarity from these central banks, and a lot of things have changed. The RBNZ, who was pretty neutral, went pretty negative, and that Kiwi rally we saw through February reversed. A lot of expectation for RBA dovishness has all been pretty much wiped away, and now what traders are discounting is no cut. FOMC came out with minutes in January, and all of a sudden, traders started focusing on the winding down of QE forever. So a lot of shifts. I mean, the BOJ has been projecting their goals since last October, since when those early elections were triggered. They've been projecting to the market very clearly what they want. And a lot of these things have played out because traders have completely discounted those previous stories, those previous expectations. And there's nothing new. What's next? We're not getting that. And so the markets are losing mojo, the swagger, the higher highs here. Now, we put in a higher high or a lower low on some of these trends. A good example of mojo right now is that Euro US. All sorts of mojo there, all sorts of attention on the downside because of the higher high. Another market that's getting a lot of mojo right now, and I don't want to leave the dollar yen until I address AZ's question, which is, could we be weakening? If you want to take advantage of weakness, you can't do it on the daily by my guidelines. You really want to do it on the shorter term time frames because the dominant psychology, the overall psychology is still very bullish. Does anybody here really want to short dollar and buy yen and commit to that longer term? That's a risky position right now. It's a very risky position right now. So while, yes, I agree there's probably a lot less bullishness in this pair that there was, I would not expect a reversal here. I would expect the uptrend to transition into sideways chop, and in which case this market would then be going into distribution, say maybe within a wide range like this, or maybe even a narrow range like that. I mean, ultimately, I don't know. We don't know what the distribution extremes are going to be, but before we start thinking bearishly, we're probably going to have some fading opportunities along a ceiling, if that is actually what's going to happen, where the market would essentially start to lose the angle and then begin to move sideways in a wide range. Okay? That would be what we're talking about, transitioning out of the uptrend into distribution, but the fades along the ceiling would still be short sells. So just be cautious here in terms of getting too aggressive, but I agree we probably are losing a lot of mojo, and the lack of higher highs is the cause. Okay? But let me contrast a market that's probably getting a lot of attention. It's not quite where I want it to be in order to say it has a bullish directional bias, but it's crossed over a number of key levels, and that is actually the Aussie US dollar. So let's take a look at that. The Aussie US had grabbed a lot of attention today by way of traveling higher through the 200 period simple moving average, a 200 DMA, which is much more than just the technical level, but it has a lot of psychological ramifications as well. But it just woke up. It got a lot of attention, but it does not have directional bias. It does not have directional bias. So if that's the issue here, it's lack of directional bias, I like the strength, but where would I capitalize on that strength? I'd have to do it intraday. I'm actually looking at a setup on the Aussie US would probably take advantage of a move back down to retest the 200 period simple, in which case I would look for a 15-minute short sell, what I call a wave reversal, to take advantage of the weakness. And that would come about because I don't have directional bias and I prefer to stick with those nimble short-term time frames. So the whole idea here would be to say to myself, well, a lot of mojo here, but mojo into a breadcrumb range of a lot of resistance. Could I ultimately exhaust around the 1.0450 area? If I do, and I roll over, perhaps we could get a momentum or a wave reversal on the 15. And this has nothing to do with a trending market at all. So I mentioned early on, don't impose trend following on a market that's not ripe for it. And here's an example of a market that has a number of setups, none of which, however, are trend following as far as I'm concerned. The 30-minute is arguably so. You could look for a buy in this area, but I think I'd prefer to wait for a Momo setup on this 15 as it starts to flatten out, in which case I will go ahead and put the MACD here and wait for a breakout or breakdown. So again, now that you have this trend following strategy and the tools, don't go just swing trading and trend following everything. Remember that when you don't have directional bias, you actually don't have a certain edge for longer term organization of price action, and therefore your follow through could be significantly limited, the volatility could be much higher. So to me, even if I'm going to trade any style that I want, I don't care if it's trend following or not, when I don't have a trend on the daily, I kind of view the market as a little bit more uncertain, potentially more volatile, and it's like a car careening down a road and I don't know whose hands are on the wheel. It's just bouncing off the guardrails, bouncing off whatever gets in its way. That's the way I view a market that does not have that directional bias on the daily time frame. And directional bias comes exclusively from the daily time frame. All right, so let's talk about the area in which I look for the entry. And I see a question about the cable from Joe. Sure, Joe, let's take a look at that cable. And I'll tackle these questions here in a moment. So the actual entry is pretty easy. It's pretty darn easy. So let's take a peek. The entry for my swings really capitalize on a zone that's created by the 20 period simple moving average on any time frame and the 34 EMA low in a downtrend, high in an uptrend. So as it pertains to the cable, it's actually in that zone right now. I don't know how many of you read the Daily Forex Trading Edge article that I wrote today. Some of you might find that pretty interesting. It was actually a seasonal. I actually dusted off some of the notes that I've been taking for the better part of about 20 years about seasonal tendencies. I've been a futures trader for a long, long time. I've pretty much gone to 80% Forex, but there are certain things that I carry over from my old futures trading days that I love, and one of them is seasonals. Now, I like seasonals much better as they pertain to, say, corn, but not necessarily the cable. But there are rhythms, and I explained that rhythm in the update here today over at the Daily Forex Trading Edge. So a lot of you might get some benefit from that as to what the seasonal is for the pound sterling right now, and has it done it recently. A lot of these seasonals were actually playing out like a seasonals playbook back in 2012, so you can check that out. I haven't talked about this kind of trading in a long time, and I enjoyed the heck out of it this morning in my morning chat. Really enjoyed going down memory lane and talking about those forces at work. And we are in a swing zone, but there's been a lot of shift in not only the dollar, but also the bearishness in the pound. Okay? Been a lot of shift in the bearishness in the pound. In fact, we've had so much discussion about the pound bouncing over the past few days. In many ways, it's become a self-fulfilling prophecy, despite the MPC's message this week during their monetary policy statement, despite the fact that the UK has had abysmal data. The market's factored in a lot of bearishness and arguably went parabolic on this cable to the downside, and a lot of traders are out there picking bottoms at this point and feeling fairly justifiably so. And quite frankly, the seasonals right now might be on their side. I think ultimately we're going to probably form a distribution market here, moving sideways. We're going to see some weakness into May, and that's all part of the seasonal. So I would highly recommend anyone who's interested in the cable check that out, not only in terms of the trend that we talk about via the 34 EMA wave and the graph candles, but also the trend via the seasonal tendencies. And I say tendencies, okay? These aren't set in stone. This is not exactly what the market's going to do. They're tendencies. They're rhythms. Just like there's a intraday day trading rhythm to the market, there's a yearly rhythm. You know, what is a Santa rally at the end of the year but a seasonal tendency? What is that old saying in equity? Sell May and go away, but a seasonal tendency. Okay, so we keep those tendencies in mind, but we don't let them overrule what we're actually seeing on the charts and hearing in terms of fundamentals. Okay? All right, so in terms of, let's tackle some questions here. And just bear with me as I scroll through them.